Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
I'm Tyler Warner, small business owner with a lot of accounting questions. Today, Marcus, I've got a few questions all about tracking categories. They may call them classes in QuickBooks. Xero, they're called tracking categories. But it's mid-year. It's a good time to kind of, take a peek under the hood. And if you're a devout listener and follower of
we appreciate all 20 of you,
the Total Control Accounting System,
right?
Then your data is there for you. You've got a solid chart of accounts. You're generating P&Ls, good, your balance sheet balances.
I just like listening to you say these things.
Yeah, that's about as far. That was it. That was about as far as I could go.
You're generating P&Ls and your balance sheet balances.
Yeah. You're a good little,
small business owner. Yeah, our gal.
Right. So, point being, I wanted to kind of just get into what are some ways to do this? Kind of take your reporting to the next level and make it work for you. You know what I mean? I think moving out of that kind of record phase of this is just the, sort of the barrier to, or what's the phrase? This is
your foundation.
Exactly. But
were you going to say bare bones? Is that what you're going to say?
No, I was like barrier to entry, but that made it sound like it was.
But you're already in the. Yeah, exactly. You've already started.
That's right.
Yeah. So if we're talking, Total Control Accounting System, where the first step or stage, I always get that mixed up, is record. So you're recording your data timely. You've got it in a cloud-based system. You've kind of got that under control. The next phase is where you start to read the data. And I think that's what you're getting into is that tracking. So we'll contrast, not contrast. We will give you the two major players that we talk about a lot in terms of small business accounting. So Xero has what's called tracking categories. A lot of you are familiar with QuickBooks, which has classes. What you're doing with those two, and we'll use those terms interchangeably throughout this talk, I would assume, is that what you're doing with those two functions is you are further dissecting your data. You're giving it a dimension. And the best way I can describe that is think about if you had, let's just give an example. You have you own Subway franchises, okay? And you've got one, I'll use an example here. We live in Lafayette, Louisiana. Neighboring towns would be Broussard and Youngsville. So let's just assume you have one, LLC, and in that LLC, just play the example forward. You own Subway franchises in those three towns, right? So easy example would be you would want to know the data per location, right? Mm-hmm. You would want to set up, if you were looking at your chart of accounts, you wouldn't want to have a sales account for every location. In my example, you wouldn't want to have sales-Broussard, sales-Lafayette, sales-Youngsville. You just want to have sales. But where you would want to then get further dimensions on the data is that you would want to then apply a tracking category in Xero or a class in QuickBooks such that you can run filtered reports around that data point. Mm-hmm. So a perfect example would be is that as you're recording the sales in whatever software you're using, you would apply that tracking category. So if I know today's sales were in Youngsville, I would use the Youngsville tracking category.
Yeah.
Now that's important because then I could then run a P&L and filter it by that tracking category. And presumably I would have done the same thing with expense accounts.
Yeah. Before we get into the details of kind of the best practices and maybe even what we can do functionally with the software, I want to talk a little bit about the motivation.
Yeah.
One of the things that kind of teed up this whole episode was a couple episodes back we had Rocky Lavani talking about profit first.
Yeah.
And he made a comment, I'm not going to get it exactly right, but it was something, kind of the 80-20 rule, right? Basically when they studied a lot of businesses, they learned that 80% of their revenue came from a small minority of their offerings in terms of services or products. And so really the motivation for tracking this is to determine your profitability as your business expands either by location or services or any sort of added sophistication or layers to your business. You sort of lose that intuitive, it gets harder to just understand where you're profitable.
Right.
You sell one thing to one group of people, then
but let's just in your example, let's say we have different service lines in different locations.
Exactly.
And Xero, which one of the things I really love is Xero allows for two categories of tracking categories.
Right.
So in that example, you could have service line and location and be filtering around both.
Right.
So it just gives another dimension of the data. To your point, it would be great to know, and you should know if you're in different service lines, different locations, name your different qualifier of your data. You should know how you're doing in terms of sales and direct costs.
Yeah.
Now, we all have overhead that might benefit all of our different divisions or service lines or locations, name your thing. But it's good to know the direct associated cost, because then you can say, you can quickly identify, is this thing adding to the bottom line or is it taking from the bottom line? And then you can make value judgments. Sometimes you'll hear this term loss leader. Sometimes you will have things that operate at a very small margin or even a small loss because they generate things for other places in your business. And we could talk, there's golf courses being a good example of that, with the golf course funnels, the real estate development, and there's all kind of stuff you can think about. But the point here you're making is when you have that dimensional data, you start to analyze and understand, where are my efforts best used? I think it's kind of what you're getting at. And Rocky was even saying that. I think people just don't have clarity around where they're really actually making money.
Yeah, and I think to recognize how quickly you can lose that clarity, because most businesses, we talk about businesses metaphorically whenever we talk about it's like the businesses you see on like credit card commercials. You know what I mean? Where they're like the ideal,
Right.
It's like one boutique coffee shop location, or you know,
for the guy playing guitar.
Yeah, exactly. Like, or some lady who like runs a flower shop.
It's always a florist.
Yeah, or some kind of craftsman. You know
Right.
what I mean? But like the reality, I'd even imagine most of the small businesses you serve have multiple, maybe not multiple locations, but serve multiple maybe industries, or they have multiple different service offerings. They have multiple like sales reps.
Think about it this way: what if you're in a service-based business where people are the major driver? You might want to know, what are your cost and associated revenue per person? I mean,
we've used the AC guy, that guy who drives a truck around, and he might service X amount of clients or whatever.
Right. Yeah, you might want to. Yeah, I think it was pest control. Well,
yeah,
AC works the same way. If this guy's running a route, you'd want to know, okay, what does his route produce? What are his expenses? What is his truck cost?
Yeah.
What is his payroll? And then we can know, like, then you can start to determine and compare and contrast people that also do identical things, i.e. in this example, another guy who runs a pest control route.
Yeah. I guess the point is to understand too that every business owner should be motivated to find their profit centers. And this isn't just for the sophisticated business owner, everybody really, you can quickly, I mean, I've had very small businesses, and I can even remember we had at least three different kind of core service offerings and kind of teams and things like that.
Sure, you even had them named, right?
Yeah.
I mean, when you had the website business, you had a social media, and then what was the other one?
Well, there were variations of that, yeah.
But it was multiple.
Yeah,
but
exactly.
Your point's well taken. I mean, it was multiple business lines within the same house, so to speak.
Yeah.
Yeah, I think too. Let me kind of give people some clarity on this. It's not that hard to do. Even it's not that hard to do in retrospect. So like, for instance, I just keep thinking about clients where we'll do this at the end of the year. We'll do tracking categories for certain clients for tax reasons. Sometimes there's hey, this type of income is taxed differently. So I'll do it on the back end sometimes for a client. And in Xero, again, I'm going to speak to Xero because we use it all the time. You simply can run a P&L by class. Well, conveniently, everything's in the unclassified, let's say by tracking category. Everything's in the unclassified tracking category. You can then go in Xero, use a tool called Find and Recode, and say, hey, tell me everything, show me every transaction in the unclassified tracking category between these dates that hit these accounts, and then quickly move them. So my point is, you don't need to remember that. What you need to remember is you can do this in retrospect and get it fixed up to help you go forward.
Yeah.
But just to know that it's easy to do and to fix.
Yeah, no, that's a good point too. Because if you're thinking, man, I got to move, this won't even be valuable to me until next year.
Right.
That's not in Xero. It's convenient enough to take the time. It might take you 20 minutes to recode some things, but it's worth it it gives you a clear picture on how things are working.
Yeah, absolutely. And if there's certain transactions that hit over and over and over, you kind of know, like, oh, that's so and so's. Like for me, one of the ones that's important to us is, and honestly, we don't do a good enough job but how are we doing per employee? What is the cost, direct cost? Well, obviously their salary, that's easy, payroll taxes, benefits, but what about continuing education? What about licenses that, because the firm pays for everybody's continuing education and everybody's CPA license, their registration with the state society. What about if they go to a conference, we have direct travel? Like it's probably a good metric to have. It's like when I invest in people, look at the return kind of thing. So name your thing in your business. I'm sure you're probably already kind of thinking like, oh, it'd be good to know this on this basis.
Yeah, we like to say the phrase every once in a while, the juice worth the squeeze. Like what is some of those things? Like, because I could see, you could get ambitious and be like, well, I'm going to track everything.
Correct.
Well, where's that at? Where's the juice?
Yeah, I love it. I love it per division and location. I mean, so that's because.
What about sales tracking? You mentioned earlier in different types of income, but I mean.
Yeah, sales, I would say sales I would say sales is kind of interesting because generally speaking, the account name would probably drive that a little bit. Okay. Like if you had manufacturing versus product sales, well, the accounts kind of drove that, right?
Gotcha.
Like, but you could have an example where within a division you do multiple types of sales, and I think at that point it would be good to know. Or in a location, man, like how are we doing in manufacturing at the San Antonio location versus how are we doing in manufacturing at the New Orleans location, for example?
Like your Subway examples earlier. Yeah, that would be location would be enough. That's implying that all the revenue from those locations.
Yeah, and I think too one of the things you start to understand is that is this kind of concept, this kind of a cost accounting concept of variable income and expenses. You start to understand, and the best example is a restaurant, right? A restaurant should always operate if their revenue exceeds their variable costs. Meaning you'll see some people like, why is this restaurant open? There's nobody here. Well, the reason is because the amount of sales they're going to take in covers the variable expenses, i.e. the personnel and the utilities. You'll start to realize that another business line added, while maybe not as profitable as others, is worth adding because the others handle the overhead. You know what I mean? Or you may say, you kind of start thinking that through and go, that may be true, but it dilutes our efforts. Like, so you start to kind of get like, hey, if we add this business line and we can clearly see how it lays out at a division level, what is it? We've already got the overhead covered kind of thing. So that aids to that. Or do we even want to do that? So I think of it that way as well.
One thing I think of too is you always like, I love like focused businesses, but what you see a lot of times is people like creating service businesses that just basically service their other service company. Yeah. And then they just kind of keep spinning up these service companies because they're like, well, we need somebody to do this and I can service that thing. Like you see it in construction a lot.
I'll say construction's the best example.
Or even an oil field service too. It's just a ton. It's like where it's, instead of paying the guy to do the sandblasting, I'm going to start a sandblasting company. Correct. Now I can pay myself and, I can
vertical integration.
Yeah, exactly. Yeah. But I think so often like that stuff, it's like, it's not really working out. It's more of a wash, and this kind of gives you that. This would kind of prove that. You know what I mean?
Yeah, absolutely. I mean, most people would say, know your numbers to know your business. And what they're saying is make your decisions based off data. The more data you have and the better, and the more granular. Again, to your point, you could go crazy with this, right? You could be tracking everything. And that's probably, first of all, you're setting yourself up to not have success if you want to track everything and anything. But to the extent you can do it reasonably well and technology is allowing it to be more and more efficient, I say track it. I say find a few key areas of your business that you think move the needle, right? That you would like to know at a granular level how they're doing. And this example just means assigning income and expenses to that category, right? Not just keeping this all in one big sales bucket and one big bucket of operating expenses. But then it'll start to give you some insights.
Yeah, and this is more of a real specific thing, but like in Xero at least, is there a way, like when you filter by tracking category, can you see things like month over month or year over year like you would with everything else?
Yeah, because essentially what you would be doing is you would start with a P&L, and then you could, in your P&L, you could then set up comparison periods. So let's just say you were looking, one of the default date. So you can use custom dates, obviously, but one of the default date ranges in Xero is this month or last month. So let's just say we're at July 14th recording this right now. Let's just say we wanted to look at June and the first 5 months. So the first 6 months of the year, we would set the date range to last month, say compare it to 5 different months, and then filter all of that data down to the tracking category one. So in this example, our Broussard subway location. Very easy to do. And then you could save that as a custom report. You say, well, I like this report, save it as a custom, and next time I'll run it, it's going to be the last month and 5 comparison periods.
Yeah. Okay. Well, that's super helpful because, then you start to be able to really use those tracking categories to actually, track the progress and make those kinds of decisions.
Yep.
What else is kind of ways to kind of configure, like when you're working with a company, like what's long enough to kind of, how do you think through like when something's a trend? Is it just a fluke? What are you looking at to kind of determine those types of things?
First thing is, we're looking at, is there a seasonality to your business, right? So are the same things happening in January, March, and April of every year? If that's the case, then we want to look at it year by year, right? But if not, then I would think a good probably 6 to 9 months is a good start to get some data flowing and to understand. But again, the more the better. But I would just say, if you're seasonal, you want to definitely let a couple years get in there because you want to be able to compare a similar period in 1 year to the prior year. But if it's not seasonal, then monthly data could be helpful. I would say to smooth out some anomalies, you probably want 6 to 9 months.
Yeah. Last kind of practical question. Help us determine the difference between like tracking categories and then like project tracking.
Okay.
I know Xero offers both of those, and there may be some overlap, depending on the type of business you're in. But what's some good guidance there?
Yeah, project. I mean, they're pretty similar. It's just a way to funnel income and expenses to a thing, essentially, or to filter down. What would be a good differentiator? Let me think that through.
So I think projects have a start and a stop.
Correct. That's probably actually the best thing, is that a project is something that has a beginning and an end.
Yeah.
Yeah, and Xero, it allows you can and again, you can assign invoices to a tracking category, but Xero it's like a function where it's like built around progress of something. Whereas a tracking category is you telling it, hey, I need these date ranges. So a project in Xero is going to be, I can quickly at a visual standpoint see, oh, we said this would cost us $10,000. We've spent $6,000. We're 60% along, in terms of percentage completion. We've got these invoices assigned to this project, and we anticipate it to be another month. That's kind of like, I think the best point you're making it, which is it's going to be finite things that start and stop. Yeah. Versus if you own the Broussard location of Subway, chances are that's going to be ongoing.
Yeah. And projects, you can add as many as you have throughout time, but like tracking categories are kind of fixed. Like you can add a ton of them, but
you've got 2. I don't know what the term is. I want to say categories of tracking.
We call them taxonomy in web design, and that's all I can think of. It's just like types of vocabulary.
Correct. And then so you have 2 of those, and you can have 100 in each.
Yeah.
Yeah.
Okay.
So think about it this way: you definitely wouldn't want to use tracking categories as like inventory items or stuff like that. I've seen people do where they kind of use it. It's a funky way, but they use it for inventory. It's like, well, are you always going to have that amount of inventory? I mean, if you ever get more, you could run into a problem. But I would just think of it as divisions. Locations is generally the best way. Rental properties, perfect example. I've got a LLC where I own a couple rental properties. Each rental property is a tracking category. That's a really good use case, really simple one.
Yeah.
Because you just want to know, how am I doing? You don't want to run a P&L. I mean, we do this. We run a P&L for the whole company, but want to know, how's that property doing versus that one?
Yeah, sure.
That's a really simple use case.
Gotcha. Yeah, I mean, I would just say play around with it. Get in there if you're not using tracking categories
or classes, in QuickBooks.
Yeah, get in there and fool around with it and start seeing what kind of reports you can generate, because that's really the power of it.
Yep.
All right. Well, any last word on tracking categories?
I think it's what you said. Play around with it, get comfortable with it, know that you can fix them in retrospect or add them in retrospect, and find a couple key points of data that make sense to you and start pivoting the data around that. I think you'll be interested and you'll be surprised maybe at some of the insights.
Yeah. Well, good deal. Well, speaking of insights, there's tons more at Mire.group. You can find all the podcasts there, as well as get in touch with Marcus and his team. And until next time.
All right, guys. See ya.
See ya.